And tracking market trends, offering us a glimpse into what investors are anticipating. And going by the recent escalation, sentiment is shifting to safe haven assets. Stocks and bonds suffering in the aftermath. Growing fears of direct U.S. involvement in the Israel-Iran conflict sent global markets lower. S&P 500 futures fell 0.9%, while Dow futures dropped 0.8%. Even as U.S. markets remained shut for a public holiday, Europe's stock 600 declined 0.8%, marking its third straight loss. Asian markets also felt the heat, dropping over 1% amid the rising geopolitical uncertainty. The MSCI World Index slipped 0.3% as investor sentiment turned risk-averse. Oil markets were the most reactive, with Brent crude climbing above $78 a barrel and WTI up 2% to $76.61. In fact, the Bloomberg Dollar Spot Index gained 0.2% as traders sought safe haven assets. The euro fell 0.2%, while the yen weakened 0.4%. Cryptocurrencies slid, with Bitcoin falling 0.6% and Ether losing 1.4%. In Europe, central banks delivered mixed signals. The Bank of England held its key rate at 4.25%, though more members than expected voted for a cut. The Swiss National Bank, meanwhile, surprised markets with a rate cut to 0%, while Norway also announced its first post-pandemic rate reduction. Geopolitical risks continue to mount. Reports suggest U.S. officials are preparing for a possible strike on Iran, with Israel already targeting Iranian nuclear sites. Analysts say a full-scale U.S. involvement could push Brent crude to $130 to $150 a barrel if Iran retaliates, and that would add an inflationary shock and likely halt global rate cut cycles. Economists warn central banks may be forced to delay policy easing if oil spikes sharply. For now, markets are bracing for volatility, with oil already carrying a geopolitical premium of $8 a barrel since hostilities started. To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.